because I know that understanding your home country's tax is confusing enough. Adding a second jurisdiction and trying to appreciate the interconnection between the two is a recipe for even more confusion. Hi, Mark here from Worldwide Accountancy, here today to talk about tax for inbound expats. So if you're someone coming from another country to Australia to live here, here is your ultimate tax guide. Relocating to a new country is an exciting time for all, especially moving to an incredible place like Australia with its beautiful beaches, laid back people and delicious food. As a new expat to Australia, there is plenty to consider, like where should I live? How do I take my coffee? And how do I understand the accent? Today, I'm talking about taxes and finances, because I know that understanding your home country's tax is confusing enough. Adding a second jurisdiction and trying to appreciate the interconnection between the two is a recipe for even more confusion. Don't worry, we're here to help, and we're here to shed some light on multiple tax considerations that you must think about prior to your move to Australia. As always, we stress the importance of being proactive, of ensuring that you look at your own unique personal circumstances and that you seek professional help in this area. This is what we do. We're here to help people exactly like yourself to ensure that you're putting yourself in the best position. As always, do not hesitate to contact us if you've got any questions. We'll put our links below. Number one, first and foremost, from tax, the most important thing to consider is your tax residency status. Your tax residency status dictates how you pay tax, how much of it you pay, and what you pay tax on. The main Australian tax residency statuses are Australian tax resident, non-resident for tax purposes, temporary tax resident, and working holiday maker. We've got so much resources on tax residency because of how vital it is. Recently, I did a video on the intricacies of ensuring you ascertain your Australian tax residency. I've also got a few more blogs that I'll link below for you to learn, because this is a vital area of Australian tax that needs to be considered. Australian income tax rates. Your tax rates are based on your tax residency status. The main three tax rates involved are Australian tax residents, and this also applies to temporary tax residents. We then have non-tax residents, and what we need to be aware of here is that you're taxed from the first dollar at 32.5%. And the last set of tax rates applied is to working holiday makers, and you'll find that one here. Capital gains tax. And what is capital gains tax in Australia? Many countries have their own tax regimes relating to capital gains. In Australia, you pay capital gains on profits from selling assets such as stocks, property, ETFs, cryptos, anything of capital nature. These assets can be purchased, inherited. To learn more on capital gains, please read our blog below. Assets when commencing Australian tax residency. So assets not including taxable Australian property previously held when commencing your Australian tax residency will be deemed to have been acquired as at the market value on the date of residency recommencement. I'll give you an example here. Let's say you purchased one Bitcoin in your home country at 40,000 Australian dollars. When you arrive to Australia and you commence your Australian tax residency, the market value of the Bitcoin is $60,000. Let's say you sell it in a couple months' time because you want to kind of get some of your capital back, and the price of Bitcoin has gone down to 50,000 Australian dollars. Disposing of that Bitcoin at $50,000, your effective gain for yourself is a $10,000 gain between the price purchased at $40,000 and the price disposed of at $50,000. However, from a strictly Australian tax calculation, your cost base of the asset is 60,000 Australian dollars, because that's the 60,000 dollars that the market value as at the price of your commencement of tax residency. So the gain here is actually a $10,000 capital loss, which you'll be able to carry forward until future years. Cash transfers. This one I hear a lot. A lot of people are worried that if they transfer cash from their home country or even from the country where they were back to Australia, that they'll be taxed on it. Look, this is not the case. You're only taxed on income you made. If you earned that money genuinely as a non-resident and in no way connected to the Australian tax regime, then there is no need for you to pay tax on it, and you can transfer freely between Australia and your home country. We like to use Wise, formerly known as TransferWise, when we transfer, just because they're easy to use and they've got really good rates. We'll put a link below if you want to connect, you want to use them. Let's take a look. Superannuation, retirement, pension accounts. In Australia, we've got a superannuation. We call it superannuation, which is effectively pension accounts, retirement accounts, 401k, RRSP. Every country has its own name. You may have contributed to a pension account in your home country, and it's really important that you seek professional help on that pension account, because there are certain tax nuances involved, because each pension account can be treated differently from an Australian tax perspective. So this one's really important. I highly recommend you do a lot of thorough research into this. Income sourced from outside of Australia. If you're earning income from outside of Australia and you're a resident for tax purposes in Australia, you must declare tax on your worldwide income. So if you've got a rental property in your home country, or your old property is still sitting there earning you income, you need to declare that in Australia. Use of an overseas company. If you are running your employment or business in your foreign jurisdiction through a company or an LLC and you arrive in Australia, there are some serious things to consider if you are still dictating operations from Australia. Foreign jurisdiction tax. Ensure you continue to monitor if you have any assets in your foreign country and if you've got any tax obligations in your home country. We recommend informing your authorities if you are planning on coming permanently, so that you may be able to finish up any sort of obligations you may have in your home country. Should you require assistance with expat tax in your foreign jurisdiction, please reach out. We've got an array of networks around the world who specialize in expat taxes. And finally, be proactive. Before you move your life to Australia, it's critical you seek tax and financial advice. We recommend doing this several months in advance to allow you adequate time to dispose of assets, make certain plans, make certain valuations, and just to give you peace of mind, because there are hundreds of other different things that you must consider when moving to a new country like Australia. Thank you so much for watching. If you got any questions, do not hesitate to reach out. Do not hesitate to comment below, and we'll do our best to answer all your questions. Thank you so much, and I really hope you've learned. Take care.